Hello traders, today is the 5th of May. My name is Evan Hornsey, market analyst YouTrading, and today I'm looking at the pound versus the US dollar. Okay, looking at the active trader platform, on the left-hand side, we've got the sentiment indicator underneath the sort of currency pairs. 67% of traders on this platform are trying to go long the pound versus the US dollar. Last night, we had the FOMC come out with their rate hike. They went up by 50 basis points as expected. Some market participants had been looking for a 75 basis point rate hike, didn't get that, and then we had we had quite a major US dollar sell-off. We had a rally in the equities, and we're back here on the daily chart of the pound versus US dollar, and you can see last night's close was very bullish. These traders on the left-hand side obviously quite happy about that. They're looking at Monetary Policy Committee today from the Bank of England to actually raise their rate. You can see here, Bank of England Monetary Policy report is due along with their bank rate votes, looking for 900, so looking for no dissenters this time. Monetary policy summary and the actual bank rate looking to go from 0.75% up to 1%. Some market participants are looking for no change. Some are actually looking for a 50 basis point rate hike to take it up to 1.25. So we're waiting to see what actually happens there. We can see on this strategy, we had a signal to go short at the close of this candle. So on the 22nd of April, lots of trend sort of strategies would have gone short. So you would have opened up on the 25th of April and you would have held through FOMC last night. And you would have seen today that most of that move yesterday has been reversed. If we look to the right-hand side, we've got an intraday strategy. So 9-period moving average and an 18-period moving average. Obviously, when we're in a downtrend, we're looking for the price action to sort of compress into the 18-period moving average, for price action to come back below the 9 and then sort of continue to the downside. And we've got a similar sort of setup strategy that you can learn at the academy. So here you can see signal to go short on the sort of 22nd to the 25th. You've got short, and then every time prices sort of pull back into the moving averages, then close back below, you could have then taken a short to sort of continue down, but without having to worry about overnight risk. You could just get in and out on a daily basis. Now on the hourly chart, you can see here we've got relatively equal lows. So if I just put a line through that, so we're looking for liquidity in there to get taken. Obviously yesterday they pulled it into sort of below that double bottom, and then we saw a big sort of move higher. So we actually saw the swing high up here get taken. And then we have to start looking to the left. So there is a possibility that we're still within this trading range, which means there'll be more stops down here for anybody that is short to sort of target. And then we'll be looking for a continuation to the downside. So if we get an algo move, if you like, on the back of the MPC rate hike or not, then sort of wait for a breakout, retest continuation to the downside, and just look, we'll be looking on the, go to a weekly chart on the left-hand side. Yeah, we're currently around here, 1.24. We'll be looking for a possible move down towards the 1.2 big figure and take out the sort of stops below the 17th of May 2020. So that's kind of what I'm looking for at the moment. Everything's sort of pointing to the downside. Obviously, you can see here on a weekly time frame, trend following strategies are a little bit easier to sort of follow for longer periods of time. But when you do get into a trend following strategy, you need to have your money management right, because obviously you can have this big move down for several weeks only to see it then pull back almost to where you would have got in. And that's kind of frustrating for trend followers. But again, you have to take the signal, because you just don't know when you're going to get, you know, 1,000 pip move to the downside. All right, at the moment, everything looks bearish on the pound versus US dollar, just waiting for the rate hike, which we go back to December, which is here. This is when they first started raising rates. We had obviously a bit of a push up, which obviously undone that sort of downtrend. But then since then, we've had a couple of rate hikes since, and I don't see why today's should suddenly reverse this trend, because the other previous ones haven't. All right, that's what I'm looking for on the pound versus US dollar, looking for the 67% of traders that are long on this platform to get stopped out, somewhere down towards 1.2. We just need the Bank of England to sort of help us along our way. All right, take care, and I'll speak to you again tomorrow.